There's been a lot of change in your business over the last 8 years since the crisis. Give us a sense right now of where you think U.S. banks stand, and stand with respect to Washington and with respect to the public at large.
Well, if you go back and look at various things at Bank of America, our brand scores are as high as they've ever been. Our customer bases are growing. The customers are doing more with us, and that's all good news. There's a dialogue about the structure of the system that will go on and probably go on forever. It's been going on for a long time. People think of Glass-Steagall and all this debate. There was a debate at that time about the structure of the banking system, so that'll go on. But if you think about it, we're healthier, we have more capital, more liquidity. We go through the stress test, and it shows we can survive a terrible recession without any prior warning, without the ability to change your business model, and have more capital than we had than we started this last crisis with. And on top of that, the activities are different. So the system's in very, very good shape. And now the question is, have you set the barriers and boundaries of it the right way so that we continue to drive the real economy? Our job is to facilitate the economy, and we got to make sure we set the balance right.
So if things are going well, why are you so unpopular as a group, as banks? I mean, you mentioned Glass-Steagall. Right. Both platforms agree on one thing, which is we should bring back Glass-Steagall. Right. Both campaigns now are campaigning to some extent against the banks. What accounts for that?
Well, part of it's just big. We're big companies, and there's a part of that. Part of it is people are worried. They're worried that could these banks create the same distress? And so when people think of Glass-Steagall, you think about people have different views of what it means. Some it's size, some it's activity, some it's risky trading, and you have all those different things. But if you actually think about what the regulatory and the people who run the companies have done, from capital, multiples of it, liquidity, multiples of it, activity, much more narrow. And the proof in that is, we made money trading every day last quarter. We have $40 billion of VAR, $40 million of VAR. Think about that. At the time of the crisis, we were probably running $400 million of VAR. So the risk is way down, but the revenue is up, and the revenue is more core. And the revenues that went away, that everybody points to, well, fixed income trade, really revenues that shouldn't have been done and are gone for good. And so you see a stability of that. So risk is down, capital is down, up, liquidity is up. And if you think about all that, it's a much safer system. Now the question then goes, is it too big or is it not? In the end of the day, we're 6th or 7th largest market cap in the world. There's 3 U.S. banks, 3 Chinese banks, 3 or 4 Chinese banks. Our companies are big in market cap and size because our economies are big. Mm-hmm. It's just that simple. And so we only have 10, 13% market share in consumer banking, and we have $1 trillion in deposits. That's because our economy is big. And so people forget that the reason why you have big banks is to support big companies, a big economy, and that's why we're here.